market action and some thoughts on the markets more broadly. We're joined now by Scott Morrison. He's founder and co-chief investment officer at Wealhouse Capital Management. Scott, thanks a lot for being here.
Nice to see you, Paul.
I've read some of your recent commentary, and one thing you believe is that the setup for M&A is unusually strong right now. What do you see on that front?
Yeah, I think that there's, interest rates are going down in the U.S. We've got more lax regulatory guidance coming out of Washington. And, generally, like you're talking about with some of the companies today, they're pretty orphaned, underfollowed, underappreciated, and so they're cheap. And so in our portfolios the last few years, we've had over 19 companies get takeover offers. Mm-hmm. And so we think that the public markets are really cheap.
Do you think that applies to Canada as well as the United States? The regulatory framework you referred to as a U.S. story.
Yes and no. I mean, we've seen some companies get taken out from our portfolios last year in Canada. We had Soft Choice. We were shareholders in Tricom. But I heard some noise out of Ottawa or yesterday talking about blocking takeovers. So We'll see. Stay tuned for that.
Okay. Well, within that, one corporate specific story that fits that conversation is Parkland. Parkland, after a long tussle, we don't need to get into all the details, but with Simpson Oil, has finally now announced some strategic review, which in many cases involves a distinct willingness to listen to takeover offers. What are your thoughts?
Yeah, your colleagues told me you were going to talk to me about that today. So I hadn't met the company for a few years. I listened to the conference call, and I can tell why they've got themselves into a bit of pickle. Like some of the analysts from Bay Street that follow them are consumer goods analysts, and yet they own oil refineries. And so they're a very complicated, diverse business model. And so they would, you need to trade them or value them by some of the parts. And there's not many old-time analysts like me left around to do that kind of exercise. And so that's going to cost them a couple multiple points. And obviously they have a grumpy shareholder that wants them to maximize value.
That grumpy shareholder, I believe, has compared the long-term returns on this stock to the long-term returns on Alimentation Couche-Tard. Is that a fair comparison? The business of both, broadly speaking, is gas stations wedded to convenience stores. Yeah,
they have some overlap. Some businesses are the same, some are different. I mean, Couche-Tard has a great track record of being, a roll-up strategy around the world. They've obviously run into some M&A resistance in their recent foray into Japan. But the Parkland admitted on their call this morning when I listened to them, the management team has nowhere to hide. They've underperformed based on return on capital.
Okay, those are some of your more specific thoughts. What's your view of broader markets right here?
It's tricky. There's lots of uncertainty, right? So you've obviously got this diabolical negotiating strategy coming out of Washington, which Washington has told you, Besant, his Treasury Secretary, says he's very focused on the 10-year bond. That's something. As a fellow money manager, I've done for 3 decades. Every day, first thing I do when I get up is I look at where's a 10-year bond trading. Mm-hmm. Last night it was a 1.5 in Japan versus that was 70 basis points a year ago. That's a big move in the last year, right? Biggest correction in the German bond market since the Berlin Wall came down in the early 1990s. So the bond vigilantes are back. Right, so that's very important, and so the bond market obviously has negative, when it corrects like that, has negative consequences for the equity market. And so with all this uncertainty, what we're hearing from our research with companies is people don't know what to do. Right, they don't know whether they should be hiring people, whether to invest in new plans, and so that's obviously the plan of attack from Washington right now is to create this uncertainty. And I think it's not lost on me that his advisors sell cars and Elon Musk. You need lower interest rates to buy a car. Mm-hmm. It's not lost to me that Lutnick is a big Wall Street guy. He wants lower interest rates. And then Trump, his pedigree is in real estate, which benefits from lower rates. Mm-hmm. So there is an attempt, I think, here to get rates lower.
When 2024 ended, one of the big narratives was the market finally was cooling on the Mag 7 stocks, and there was a push into smaller cap stocks. Do you still see that as part of the narrative this year?
Yeah, definitely we have a broadening out effect, right? So you've had the biggest concentration in the Mag 7 or concentration amongst equities in the last 100 years. We've talked a lot about that at our shop. And so you have this opportunity. If M&A takes place like we've seen, it should be bullish for small and mid-sized businesses. But with what's happening in the economy right now, there's more volatility, there's more risk, and so there's a risk-off environment. And so that's not necessarily conducive to small caps outperforming right now, right here, where there's less liquidity.
Okay, let's talk about some individual stocks you like. One of them is Kinaxis, ticker symbol KXS in Toronto. It's a provider of planning and response management solutions.
Yeah, so they're a software company headquartered out of Ottawa. I figured, in light of this trade war we're in, I should be somewhat patriotic and come forth with some Canadian names. So they're best of breed globally when it comes to supply chain management software. And we think people are underestimating where they'll be able to use AI, artificial intelligence, to help their installed base around the world. So they're one of those few Canadian companies we can use as an example. We need to build more of those kind of companies that can go into the world and sell their goods into Asia, into the US, into Europe. And so we think that Kinaxis has the potential to expand margins and to grow their business as they lever or allow their customers to lever the data repositories they have by using their software with artificial intelligence.
Okay, number two, another stock pick, Topaz Energy. This is a energy infrastructure company.
Yeah, so in the next 10 years, it's hard for me to imagine a scenario where Ottawa will be more antagonistic or detrimental to Western Canada, right? So obviously the answer to the test now is Ottawa totally mismanaged our country's resources. And so I think Topaz is an infrastructure and royalty company that's spun out of Tourmaline, which is a very strong, low-cost natural gas company. And there seems to be consensus building in this country finally that we should be exporting, east and west, our precious resources to help finance our economy.
How much likelihood do you think that we will export from the East Coast?
I grew up in Quebec, and so I wouldn't hold my breath. So I remember, Quebec is distinct, and I have lots of friends in Quebec that I've tried to convince over the years that they should be more respectful of the assets and the blessings we have from Western Canada, but it has been an uphill battle to convince my friends back in Quebec of that.
Okay. Finally, a U.S. stock, American Homes for Rent, ticker symbol AMH in New York.
Yeah, so this is my underhanded shot a bit at Canada, right? So American Homes is a business that came out of the financial crisis from 2008, where they were very adept at rolling up single-family residential. They have over 60,000 homes. They have a vertically integrated development pipeline. But the point is this: if you go down to the States right now, into their markets, you can rent a full house for less than what it would cost to rent a one-bedroom apartment in Toronto or Vancouver. And so that's why the jobs are going down there. Yeah. That's why those businesses are more competitive with us. We have not here had leadership that solved our cost of living problems.
Scott, thank you for joining us. That was Scott Morrison.